Somewhere in Europe right now, someone's salary just landed in a Revolut account they trust with their entire financial life. Their savings are there, their rent money is there, their card is connected to everything, and they probably believe Revolut works exactly like a normal bank. But for years, in one of the world's biggest financial markets, it legally wasn't one. In less than a decade, Revolut transformed from a tiny fintech startup into one of the most valuable private financial companies on earth. More than 50 million users across over 35 countries now rely on the app for banking, payments, investing, crypto, and international transfers. At its peak, the company reached a valuation above $45 billion. On the surface, it looks like one of the greatest fintech success stories ever created. But underneath that growth story is something far less comfortable. A regulatory record that in many cases would make traditional banking executives panic. And more importantly, what does that mean for your money? Because once you start digging into Revolut's history, a very different picture begins to emerge. One involving licensing delays, anti-money laundering failures, fraud complaints, frozen accounts, security breaches, and regulators across multiple countries, trying to figure out whether the company's infrastructure was actually keeping pace with its explosive growth. Revolut operated in the UK for years without a full banking license. It finally received one in July 2024, but even then, regulators were not fully satisfied. The company entered what's known as the mobilization stage, essentially financial probation. The Bank of England's Prudential Regulation Authority demanded proof that Revolut's compliance systems, internal controls, and risk management infrastructure could actually handle the scale of the business it had already built. And that process dragged on for years. Revolut only received its full UK banking license in March 2026. Think about that for a second. Nearly a decade operating at massive scale in the UK before obtaining the same level of regulatory approval expected from a traditional bank. But the real warning signs started appearing once regulators began looking under the hood. In April 2025, Lithuania's central bank issued Revolut Bank a €3.5 million fine, the largest AML-related penalty in the country's history. Regulators found the company was not adequately monitoring customer relationships and financial transactions. But what makes this especially concerning is that it wasn't an isolated incident. That Lithuanian fine became the fourth major enforcement action against Revolut since 2022. In just a few years, the company accumulated multiple penalties tied to anti-money laundering controls and capital requirement breaches. And when the same category of failures keeps appearing across multiple investigations, regulators stop seeing accidents. They start seeing patterns. Then Italy stepped in. In April 2025, Italy's competition authority fined Revolut €11.5 million over consumer protection violations connected to investment services and account management practices. At this point, the issue was no longer a single regulatory disagreement. Multiple European authorities were independently raising concerns about how the company operated. But compliance problems are one thing. Fraud is where things become personal. In 2024, Revolut customers filed more authorized push payment fraud complaints with the UK's Financial Ombudsman Service than customers of almost any other major financial institution. Thousands of users claimed they had lost money through scams the platform failed to stop. The BBC's Panorama program later identified Revolut as the UK institution associated with the highest number of fraud cases that year, including one customer who reportedly lost £165,000 in a single hour. And beyond APP fraud, the Ombudsman recorded nearly 6,000 fraud-related complaints linked to Revolut in 2024 alone. In more than 1 out of every 3 escalated non-APP fraud cases, investigators sided with the customer rather than the company. That is not the kind of statistic regulators like to see. But one of the biggest fears surrounding Revolut isn't fraud, it's access. As the company tightened its anti-money laundering systems ahead of increased regulatory scrutiny, automated monitoring systems began freezing accounts at a scale that triggered growing backlash online. And this is where fintech platforms create a unique kind of risk. Imagine waking up on payday and discovering your account has been restricted. Your salary just arrived. Your rent is due tomorrow. Your card declines at the grocery store. And customer support cannot tell you when or if access will be restored. Italian regulators specifically criticized Revolut for failing to provide sufficient notice before restricting customer accounts and failing to offer meaningful support once those restrictions were applied. For users treating Revolut like a primary bank account, that kind of scenario becomes more than an inconvenience. It becomes a financial emergency. Then there's the cybersecurity record. In September 2022, attackers used a social engineering attack against a Revolut employee to gain access to the personal data of more than 50,000 customers. Names, addresses, phone numbers, and partial payment information were exposed. And the scale of the breach raised another uncomfortable question. Why could a single compromised employee access that much information in the first place? Then in 2023, cybercriminals exploited a vulnerability in Revolut's US payment processing infrastructure and reportedly stole around $20 million from company funds. The money came from Revolut's own balance sheet rather than customer deposits. But the implications were still serious. A flaw inside core payment systems remained undetected long enough for tens of millions of dollars to disappear. But perhaps the most explosive allegation in Revolut's history dates back to 2018. According to reports, the company temporarily disabled an automated sanction screening system designed to detect transactions linked to money laundering and terrorism financing. The system was reportedly inactive for several months. Revolut disputed parts of the reporting, but the controversy never fully disappeared, and this is ultimately the central risk behind modern fintech. Companies like Revolut grew faster than traditional banking systems were ever designed to allow. Millions of users arrived before regulators, compliance systems, and internal controls fully caught up. The result is a platform that feels like a bank, behaves like a technology company, and in some countries still exists somewhere in between. Now, to be clear, none of this means Revolut is a fraudulent company. It clearly isn't. Millions of people use the platform every day without issues. But the real question is whether most users fully understand the risks they are taking when they concentrate large amounts of money inside an institution built around aggressive speed and scale. Because your actual exposure depends entirely on how you use the platform. If Revolut is simply a travel card holding a few $100s abroad, your downside is limited. But if your salary goes there, your savings sit there, your bills depend on it, and your financial life runs through that app, then understanding the platform's regulatory status in your country becomes extremely important. In the UK, deposits now benefit from FSCS protection following the company's full banking approval. But in other markets, equivalent protections may still differ depending on how Revolut operates locally. And that distinction matters far more than most users realize. Because when everything works, fintech feels effortless. It's only during fraud events, account freezes, security breaches, or liquidity crises that people suddenly discover the difference between a fast-growing app and a fully mature banking institution. The question is no longer whether Revolut can keep growing. The real question is what happens when a company grows this fast in an industry where trust matters more than anything else. And by the time most people discover the answer, it's usually already too late. If this video helped you understand something the marketing definitely won't tell you, press that like button and pass it along to someone who could benefit from it. Please consider subscribing to the channel. Thanks for tuning in. Catch you on the next one.